No rain.
You're the first person who I learned about index investing in India from. And I'm sure you're one of the flag bearers of index fund investing in India. So why don't you tell us a little bit about index fund investing in general for the viewers who don't know about it?
Yeah, so basically the idea of investing is that betting on the economy. So there will be few companies which will do well. There will be few companies which will go bankrupt. You don't know which will do well and which will go bankrupt. Like in 1980s, India's best companies were Bombay Dyeing, Oswal Chemicals, DCM Shriram, HMT Watches, Hindustan Motors. If you would have bought India's best companies in 1980 and you are still holding them today, most probably you have lost all your money. But the index has still gone higher. Index in 1979 from 100 points has gone up to 38,000. It has gone up by 380 times in last 41 years. So it means anyone in India, if they wanted to make 380 times return in last 41 years, all they had to do was bet on the Indian economy. And when I say bet on the Indian economy, the easiest proxy to bet on the Indian economy is buying a broad-based index like Sensex and Nifty. So India's GDP is about $2.9 trillion, which is the 2019 data. And if you look at the market value of the top 50 companies in India, if you look at the market value of top 50 companies in India, that would be somewhere around 2.2, $2.3 trillion. So we keep on saying that market value of all the listed companies in India is a very good reflection of the GDP of the country. GDP basically means production. So when the production increases, the top 50 companies will produce more. If they will produce more, they will sell more. If they sell more, their profits will be higher. If their profits will be higher, their share price will be higher. So as and when GDP goes higher, as and when India's GDP goes higher, Sensex and Nifty as a basket will also go higher. Why will it go higher? Because you and I as consumers will buy more mobile connections, will buy more cars from Maruti or some other company, more houses from a realty company, more say oil from oil companies. If you and I buy more, what will we buy? We are not sure. Because the next generation might not buy a helicopter, they might buy something else that we don't even know of today. But whatever they want to buy, their ability to buy would have gone higher, which we keep on saying that no matter what happens, the next generation will always lead a better life. So when people doubt that will the next generation lead a better life, you need to ask yourself a question. Some people say, what if there is an India-Pakistan war? Think about what happened with the Hiroshima Nagasaki and look at where the world is today. What if there is a huge financial crisis? Think about 1929 Great Depression. Think about 2008 Great Recession. Look at where the world is now. So Warren Buffett followers keep on saying that no matter what happens, the next generation will always lead a better life. And when I say better, I mean the materialistically better. So when I say materialistically better, it means they would be consuming more. If those people would be consuming more, the top 50 companies will be producing more sales, more profits, higher share price, which will take Sensex and Nifty as a basket much higher. So when you invest in the Indian economy, so what I would like the audience to understand is that 380 times return, which is the Sensex return from 1979, from 100 to 38,000 till today, which is 41 years, in the last 41 years, 380 times return in last 41 years was every Indian citizen's birthright. This was birthright because the Indian economy has done well. In fact, when we talk about equality, when we talk about pulling people out of poverty, the best way is the farmer has to realize that industries are making more money than a farmer can make. So how does he participate in the industrial growth? The easiest way is whatever money he makes through farming, which is an important activity, he should start investing in Sensex and Nifty. So I find it very funny. I mean, when I was in college, I would not take names of political parties, but when I was in college, there was a person who came to, since he was from political parties, so I'm not taking names, but there was a person who came and said that Mukesh Ambani is making so much money, and not that I'm a fan of Mukesh Ambani or so, or not that I'm justifying what he does, or I'm not saying that he does everything right. But the point that he was trying to make was Mukesh Ambani makes a lot of money, but poor people are not able to make money. So the easiest thing is tell poor people to invest in Reliance stock. If Mukesh Ambani makes money, the poor person also starts making money. Then he said that what if Mukesh Ambani goes out of business? Then I told him, then tell him to buy a Sensex and Nifty. If Reliance does not do well, somebody else will replace Reliance. So the important thing that we need to make sure that this reaches the bottom of the pyramid, that if they want to participate in India's growth story, which has been tremendously big in the last 20 years, they need to participate by participating with the industrialist. And the easiest way to participate with the industrialist is by Sensex and Nifty, which is the top 30, top 50 companies.
That is amazing. That is amazing. Wow, guys, if you got nothing out of this podcast, this is one thing that you must get out. And that's what Varunji has spoken on his TEDx talks with BSF Jawans everywhere, that invest in the economy.